There is a growing belief that the dollar's significance in global finance, particularly in the oil market and the use of the petrodollar, is diminishing as countries like those in the BRICS group, the Middle East and Asia, increasingly use their own currencies for cross-border payments. The petrodollar, in essence, is an agreement made by Saudi Arabia to use the revenue from oil sales to the United States to purchase U.S. treasuries. However, the history behind it is more complex. Let's go back to 1974 when the Nixon administration was facing high inflation and large deficits due to the Vietnam War. This put pressure on the dollar and threatened the U.S. gold reserves. In 1971, the United States ended the dollar's convertibility to gold, which was a key aspect of the Bretton Woods system. Major currencies began to float against each other in 1973. Later that year, the oil shock occurred when OPEC cut oil production and embargoed shipments to the U.S. during the Yom Kippur War. Amidst economic and political uncertainty, the Nixon administration embarked on a diplomatic mission to establish an economic partnership with Saudi Arabia. This partnership, which involved Saudi Arabia using the dollar as the medium of exchange for oil sales, was crucial for the global energy trade. In return, the United States promised military equipment and national security protection to Saudi Arabia. This agreement not only stabilized demand for the dollar, but also promoted its use in oil and commodities trading, while creating a steady demand for U.S. treasuries. This strengthened the dollar's position as the world's primary reserve, financing, and transactional currency. Fast forward to today, and the United States' dominant global position has weakened compared to the past. Its share of the world GDP has declined, while China's economy has surpassed it. The U.S. now has to compete with an assertive Beijing and faces pressure from allies who want more autonomy from Washington in financial and foreign policy matters. Many countries have sought alternative cross-border payment arrangements to reduce their vulnerability to U.S. economic and financial sanctions. Additionally, the U.S. has become less dependent on Saudi oil due to the shale revolution. The U.S. is now the largest oil producer and a net exporter, while China has become Saudi Arabia's largest oil customer. China has established strong trade relationships in the Middle East, where U.S. influence has diminished. Saudi Arabia's interest in diversifying the currencies used for oil sales aligns with its larger strategy of expanding international relations beyond the U.S. and Europe. Joining the BRICS group and partnering with China and other countries in exploring the use of central bank digital currencies for cross-border payments reflects this strategy. Saudi Arabia's move towards currency diversification is a small step towards de-dollarization. More countries are using their own currencies in cross-border trade and investment, relying on currency swap lines and national payment systems outside the influence of major powers. While using local currencies currently comes with efficiency costs, advances in digital payment technology could reduce these costs. The digital payment ecosystem has made progress towards tokenization, which allows for instantaneous and direct exchange without intermediaries like commercial banks. This could reduce the need for participants to hold reserves, weakening the role of the U.S. Treasury securities market in supporting the dollar's dominant position. The share of the dollar in global reserves has already declined in favor of secondary currencies. While the dollar's dominance will likely remain in the foreseeable future, a gradual democratization of the global financial landscape may be underway. This could lead to a world where more local currencies are used for international transactions, with the dollar maintaining prominence, but without its current level of influence. Currencies like the Chinese renminbi, the euro, and the Japanese yen could play a more significant role based on the international footprint of their economies. Saudi Arabia's approach to the petrodollar will be an important indicator of the financial future, as its creation occurred 50 years ago.